You see deregulation of the banks, more money. You see a lot of money on the sidelines where, and you're looking at interest rates, they're going to come down regardless. If they don't come down now, you know that the next Fed chair is going to come in May, and they're going to be a lot lower, say, a year and a half from now. The conditions right now are ripe for asset prices to go a lot higher. And I'm not saying that I'm cheering a spending bill because I know there's so much garbage in that stuff. I'm just saying our job is to give opportunities to our investors, and the opportunities are really looking really good when I look 12 months out from now because of all these tailwinds that are coming.
The interest rate issue is an interesting one because now we just in this bill increased the debt ceiling to a few $1 trillion, and the Fed has been holding back.
Debt ceiling when they keep raising it?
It doesn't matter. It's the heavens, the debt heavens.
Good.
But the Treasury Secretary has been holding back with new issues because they didn't have the ability to do so. And now they need to fund a lot of this. So there's going to be a lot of new issue coming out. And that's going to be trickling out in probably the shorter end of the range. The curve is going to probably be in the bills plus maybe 2, 3, 4, 5 years, maybe. I don't think they want to really push down the other side. That's maybe going to raise interest rates as more people don't want to buy that. And then you have the issue about the lowering of the rating by Fitch, a non-event to a degree. Yeah. We could scoff that off saying the rating industry, we like when a rating industry will increase our rating, but when they decrease it, they're no good. They don't mean anything. And when we have a situation like we have now with the massive amount that's going out, I do think that there is going to be the potential for a problem. We saw what happened with the dollar over the last year, down to levels that we haven't seen since like 2021. Very weak dollar. Why is that? Because we know that there's going to be a tremendous amount of spending, and the concern about the U.S. economic situation long term, the spending that's going on. The Republic, by the way, news alert, Frank, the Republicans are not the party of restraint any longer, right? They're not the party of fiscal responsibility any longer. They're spenders. They're spenders. They're both spenders. Mm-hmm. And this bill, which is supposed to be all about, holding back, cutting back and all that, not happening. And I think this gives a lot more opportunity for Trump also to go out and do a lot more hardcore tactics when it comes to the tariffs, because he has the backdrop that we did get the tax deal not rolled back, but held, where the taxes are held. So I think 12 months, yes, you have to be selective. I think that interest rates, I don't think they're going to be a lot lower. It would be nice to be a little bit lower, but I think those days are gone for a while. I do. And I think that the inflation rate will not really subside that much. That doesn't mean, oh my God, this is going to be the same cycle that we have where we're seeing an incredible amount of opportunity from, technology. And what that has spurred on, what we talked about in the last time I was on your show, we talked about utilities and remember I talked about this, nuclear energy?
Yes.
Right? We don't talk about nuclear energy anymore. It's new clear energy because it's much more palatable to people to think about this. So we had stocks like SMR and Oklo, Next Era and Exelon, Southern. Those companies are doing great, just great. I mean, the nuclear SMR, small modular reactor stocks, unbelievable. Still haven't been proven necessarily, but Amazon is doing an incredible amount of investing there. So I think we're going to have pockets of opportunities. I think it is a market where we need to be bullish, but I think we need to be a little bit reserved also. We can't be like leveraged up in this kind of environment that is so chaotic. That's the only point I was going to make. But yeah, there are a lot of opportunities, Frank.
You mentioned nuclear is one of them. And I guess even when you say, I do hate the term stock picker's market, because when I look at some of these stocks and you look at like the SMRs and stuff, and I wrote some of this down, and we could even go into some of the other ones that have really taken off here. But even Oklo, it has an $8 billion valuation. Zero revenue. And for a technology that has to go through state, local, federal approval that has not been proven, and it's not scalable at all right now. So you're seeing contracts come in, but they're not really paying for it until this stuff's going to be ready, which is at least 3, 4, 5 years of the people I talked about in my industry. And then you're assuming that, again, getting all the approvals across the board. I mean, you're going into American politics, which is a nightmare when it gets bureaucratic, especially when it comes to energy and stuff like that. And you're seeing the energy, and you're great calling utilities with. And that leads to my next question. How does this filter down to sectors? Because I think people are like, where do you think the market's going? I don't know what the S&P is going to do. I don't know what small caps is going to do, but I really like a lot of small caps here. I just think they've been totally out of favor for such a long time. They have adjusted. They adjusted to high interest rates. They adjusted. They're not going to be impacted by tariffs as much because a lot of those businesses do business just in the U.S. already. They cut their costs already. So now you're looking at them, transforming their business because the last 2 years have been so bad. There's a lot of great names in there. Same with the S&P 500. I'm not telling you the whole S&P 500 is going to go up, but there's certain sectors that within it, which you touched on with nuclear. What are some of the other sectors you see, over the next whatever. I don't like to ever go out more than 24 months because the world could change dramatically. But even like the next 6 to 12 months, what are the sectors that you're looking at saying, hey, we got to find some more stocks within these sectors because they just look that positive?
One thing you have to note is everything is a caveat, right? We don't know who's going to wake up on the wrong side of the bed tomorrow in this administration and say, oh, that company we don't like anymore. What I think is really interesting, one of the top inside the S&P 500 sectors this year, crazy enough, I wouldn't have thought of this. When I looked at it recently, I'm like, oh, industrials. Now, part of that's because Boeing is up like 20% this year, and you get Caterpillar and a few of those. But also, I think there's a lot of opportunity in the defense area from this bill. I mean, a lot of that's been pulled forward a lot already. You see that. But there's definitely opportunity in the defense area. I think you're looking at some new areas, too, in the, I'll call them industrial, I guess, to a degree, a transportation industrial. But the industrials also have one of the first places to get the trickle down of monies from a stimulus bill. And by all accords, this is a stimulus bill. So the money that's going to come in, now look at what happened with gold and gold miners. And that's, every time I think about gold and gold miners, all I think about is gigantic trucks, right? And cranes and stuff that you and I probably would have a real kick taking a ride on, right? And these big trucks that are going through these mines, being filled up and dumped somewhere else, sifted through, all these kinds of things. Now, do we need all these new trucks? Well, maybe. But what Caterpillar has as an example, or even a Deere, or, pick your poison of what particular rental company that you're going to look at. A lot of these companies are built on revenue from sales, but they also get revenues from services. Massive revenues from services, by the way. I was on a boat last week and there were Caterpillar engines and something happened. It wasn't catastrophic or anything, it wasn't a problem, but call the Caterpillar guy. That's the guy you call that deals with the Caterpillar engines. So all these kinds of services and things that happen. And if in fact we are going to continue on with what we're doing of building the infrastructure back in America, that is something that's been talked about. And a lot of the sausage factory that was built inside of this bill is going to have a lot of that state by state, county by county refreshes of bridges and tunnels and railroads and roads and all that stuff, right? And that is industrials, generally speaking. So I think that's kind of an interesting under the radar play that people don't think about, because we only want to think about Apple and we want to think about, NVIDIA. That's all we ever talk about. But I think that's interesting. Healthcare.
Go ahead. Let's go into healthcare. I
was going to say healthcare. Healthcare is on my list because they're just so horrible. It's just so bad. There's a couple of stocks I like in that area. Another one that's probably below the radar, CRISPR. The idea of having CRISPR therapeutics. They have
like that for a long time. Yeah.
Liked it for a long time, and it's been very good. I've been in and out of it many, many times. I rode it all the way up, took a giant chunk out of it, started buying it again, and up a bunch on it now. So I think it has a great roadway to go.
When you're looking at other sectors, industrials is interesting. And industrials could even filter down to drone companies when you're looking at the bill and the Golden Dome and all this stuff. So it's when you look at infrastructure and you say industrials, it's so wide. I mean, you talk about, is it cement companies? Is it planes? Is it engines, Caterpillar? I mean, there's 1,000 companies in those. So get more specific in terms of what do you see? Because I would even throw drones in there as well, because they're talking a lot about drones, which you're seeing AVAV go higher. Kronos is another one. AVAV we've had forever. We've had on portfolio since 25. It's 250.
Is that AeroVironment, right?
AeroVironment, yeah. And same with Kratos, because just the demand for those products. And I love the fact when you're looking at, not that we're getting into another sector, because I also consider it, again, a little bit in industrial space, but defense companies used to be 4 or 5 of these guys. And now you're seeing the Palantirs branch out. Like there's specialized defense companies that are small, that the big guys are actually doing business with these guys, right? Yeah. And when you see the Kratos and AVAVs, like those names just made a lot of sense to us, which is doing well. But what are some of the names like within those sectors that you see going higher?
So if you talk about the drones, I mean, when we mention drones, and anybody that's listening right now is thinking about this whole idea of drones, we're not talking about the handheld drones that are going up just to kind of take pictures of, you walking along the street. Those maybe, but I'm talking about the driverless cars, the autonomous car concept, right? Where you can do maybe deliveries of goods or people, right? Short-term rides, especially EV style. So you have a couple of companies in that area that are very interesting, like Joby, Joby, and you have Archer Aviation. Archer just did a massive offering at $10 and just blew it out, and the stock was down like 15 or 18%. But now that that's kind of cleared, I think there's, because you have to clear the offering, right? So the offering's cleared, people have it now. They're going to, I think, get back to business. And the reason for that was because Archer ran up hot during the idea that they got the thumbs up. There was an executive order actually dealing with these kinds of companies in the autonomous aviation area, really trying to promote that. So you got an EV company, which is Archer, and then you have the Jobies and Archer to a degree, where they're working on, I'll even throw AI in there, AI assisted driverless flight for pickup and delivery of people's goods, your pets, whatever it may be. So it'd be nice if you walked up to an airport, a specialized area in an airport, you say, I want to go to the other airport, right? But I don't want to deal with traffic. I want to go from LaGuardia to Newark. Or for that matter, these things are so small, they can land on a basketball court in your neighborhood. And they pick you up and you go wherever you're going to go. Now, obviously, there's a lot that has to go into this, right? You have to deal with flight plan issues. You have to deal with aviation. Who's going to be at 1,000 feet, 2,000 feet, 500 feet? What's going to be the roadways, that, if you will. The rules of the road is a big issue. That's going to have to. It's more than just giving them authority to do so. Because if you have like driverless autonomous driving with Tesla or Waymo, they have roads already. Right? There are roads. There are no roads up there. So we don't want people crashing into everybody. You don't want to be crashing into your Domino's pizza delivery or your Amazon delivery as you're going to the airport. Right? That would be kind of ugly.
You mentioned Archer, right? So Archer, $6.5 billion valuation, zero revenue. Joby, $9 billion valuation. They generated $100,000 in revenue. So just the value of these companies and the expectations of these companies to get this right is already factored in, right? If they get it right, these things could have $50 billion valuations. We know that. And I've seen it. I'm not saying that's not going to happen. I'm just saying that it would be nice if these things were a lot lower compared to, and I know maybe some people own them a lot lower and have done well, but at these valuations, you're pricing in that this is definitely going to happen. And it's going to happen within 12 months. And I don't know if I agree with that with those valuations. I've seen this technology. I've seen it. I've gone to a Consumer Electronics Show. I've seen it 3-4 years ago. I've seen these things. I actually saw when you get in them and the aerial displays and stuff like that. They're on like the bottom level in the Sands Expo, which is part of the Consumer Electronics Show every single year that I attend in January. And it's there. You could see it, but just the scalable. When I see things like this and trading these valuations, I'm like, is it scalable? Is it here already? And you've seen some big companies invest in it, but when the valuations are getting like this, I'm like, whoa, it gets a little crazy. So do you look at these as trading vehicles or investments?
They are trading until they become investments. That's how you have to look at these. Right? You have to look at these as I'll be in. The same thing with Palantir. Palantir, when we got into it at like 13 or 14 or whatever it was, added to it, snapped back, took some out, put some back in. Until it became a solid investment with real revenue, you got to move around and be kind of on your toes.
Yeah.
Right. You
Just
can't
like Tesla, I mean, the expectations are so high. They weren't generating revenue. Next thing you know, boom. It was incredible.
Amazon, same exact discussion about Amazon. If a lot of people wouldn't go near it. Okay, I have no problem with that. The question is when to hop on the train. It's very difficult to hop on the train once it left the station.
Yes,
right?
It is difficult when it's a lot higher. You feel like you missed it, and yet, you could have said that for Netflix. Oh my God, I missed it. It was 100, it went to 300. It's 1,400. Yeah, that's so great.